Before I look at the charts, I just want to highlight something for you. It's this appeared on my Twitter. If you are on Twitter, by the way, she's very well worth following. Her name is Lisanne Saunders. I think she's with Charles Schwab. She's one of their sort of analysts and what have you. And she's really good. She produces all sorts of really interesting charts and data that I've not really seen elsewhere. She's always got something a little bit extra, as it were. And this is for tomorrow's NFP. And what it is to show we've obviously got this huge unemployment problem, not just in the States, but here as well. But as David said earlier, it's impacting different industries, and obviously the industries that it has impacted, things like hospitality, things like retail, you know, those sort of face-to-face industries where people are, you know, they are interacting. But what she's actually broken down, this is for the US, is the accommodation and food services, which is hospitality, and it's the labor, it's called the labor intensity aspect of that job, and that's a 3, and then you've got retail, trade, and that is a true, and those are 2. They're not hugely paid. The other thing about it is they are not terribly well-paid jobs. So, you know, it's going to have all sorts of implications from a society, from the societal perspective, but and also on the market side is those industries that are in the hospitality. I mean, if you've seen what airlines, what airline stocks are doing, what the cruise liners, the cruise companies, the retailers. Now, retail is quite unusual because you now have this this difference. It's always online has absolutely taken off, and we're, from a practical perspective, we are absolutely grateful that we do have an online, you know, ability to shop and what have you. My aunt in Italy, she doesn't. Italy isn't set up in the way we are here in the UK, or certainly in the US. They have to go they have to go out and shop. But so whilst the market is doing what the market is doing, and we trade and we look at the charts and etc., there are big wholesale changes coming in the coming months and the coming years, and it will all be reflected in the releases, the data. Whole industries may disappear, new industries may crop up instead. So as I said, we are at, I think, this big inflection point, not just in the next few days and few weeks, but as I said, few months and few years. But anyway, if you are on Twitter, do consider getting her, following her, Lisanne Saunders. She does produce some fantastic data, which is and she explains it. It's very easy to read and interpret as well. Right. Going back to, I said I'd talk about the Euro Aussie, but I just want to talk about the Aussie generally, because the Aussie and the Aussie pairs, in particular the Aussie dollar and the Aussie yen, are great proxies for risk. David said this business is all about risk, and whether the market is looking to is willing to take on more risk for more reward, or it's looking to move away from riskier assets because of either, you know, geopolitical circumstances or a bad fundamental news. I mean, it's really all this is about. It's either risk on or risk off, and you as a trader and investor, you have to decide what is your risk tolerance, as it were. Now, in the Forex program, we always strongly recommend that our students make themselves aware of other markets other than Forex. One of the modules in the program is what we call the relational analysis. So we look at other markets to give us a sense of what what is the sentiment out there, because that is going to have a direct impact on the buying and selling of certain currencies. Now, we could actually reverse that, because if you are trading something like, as I said, the indices, you can say, well, if I look at the Forex market, what should I look at? And you really, at the moment, for whatever reason, there is a very strong correlation between some of the Aussie pairs and what is happening in the indices. And we've got a great example here. As I said, I've actually pulled up the Aussie yen. Now, this is the 10-minute chart of the Aussie yen. And all I've got on this chart, I've got some candles, I've got our volatility indicator, I've obviously got the volume down here, and I've got our Camarilla. indicator, because this gives me my important levels for the day. Now on the 10-minute chart, these are refreshed on a 24-hour basis. So tomorrow, when this market rolls over tonight at 10 o'clock, I will have fresh levels for the trading session for tomorrow. If I go up to the 60-minute chart that I've got here, or I need to put more data in, excuse me. This is one thing I don't like about NinjaTrader. For whatever reason, the hourly chart never seems to hold the days. It never does, it defaults to 5. Now, what is interesting about the Aussie pairs, and I said earlier, the Aussie has just been rampaging higher ever since that case-in released earlier on in the week. And what's happened is with the levels is, and it's across a lot of the Aussie pairs, is these levels here are calculated for use for the whole week. But what has happened, because we've had such a strong price action, big ranging candles, it's blasted through all my levels. The Camarilla indicator actually posts 6 levels, not just 4. It's gone through here, and you think, well, hold on a minute. Well, what am I going to do? Where's this price action going to? Where's it likely to reverse or stop? So what we've done with the indicator, actually, I've had to go up to the weekly chart, because the weekly chart, the levels are calculated for the rest of the month. But even here we can see it's actually got to an R6 level, which is the furthest most point, if you like. And this is what I was trying to explain. This is a week's candle. This is a week's worth of price action just on this pair. And you look at it and you think, okay, I've had some big candles. This was the big crash. This was an extreme event. This isn't an extreme event. This was the result of one piece of fundamental news coming out of China. Anything to do with China always impacts the Aussie dollar anyway. But this is quite extreme. But what's interesting is look at the volume underneath it. I mean, for that size candle, and there's something not right, which is what we were trying to say earlier on. There's all sorts of little things going on in the markets that you have to be aware of. Now, going back to the 10-minute chart, as I said, these are the daily ones. You can see here we had this around about the open that we had of the US Open. We had this rush up, and we ended up with the shooting star at the top, pierced through the R4. The R4 is an important level, went through it, didn't hold, come back, and then we've come low. But have a look at the price action on the YM around about the same time. We had the open at 4:30, we had this rush up, we have here, that actually hit the R2 for the daily level for the YM. Reasonable amount of volume, and the volume falls away, and in fact we looks like a sort of hanging man candle, and then we had a fall, not a dramatic fall, but a fall, a congestion, and down. And now it looks like it wants to reverse again. We go back to look at the Aussie yen, and again, very similar price action. I haven't got the correlation numbers, I haven't got correlation figures, as it were, for these two, but generally, and I think even, and I read somewhere that that the Aussie dollar and the S&P are behaving in a very similar way. What we tend to use in Forex is the yen and the yen pairs, and certainly the Aussie yen and the New Zealand yen have been on this rampage. So that's what I wanted to highlight there. Levels get taken out when you have extreme price action. You simply then have to go to higher time frames, because eventually you will come to a significant level. I'm just going to pass back to David, and then, as I said, I'm going to have a look at the Euro Aussie.